Good morning, everybody. Happy Tuesday. I hope everybody had a great weekend. I wanted to jump on for a few minutes this morning and talk about accounts receivables, how the best way to set it up, what exactly it is, and how to manage it. So, your accounts receivables is when you are charging your clients by sending them an invoice that they can pay at a later date. So, some of the things you need to decide is, are you going to do that, or are you going to require cash at the time of a service? If you do provide what is basically a line of credit to your customer, that is what your accounts receivables is that they can pay you at a later time. How long are you giving them? Are you giving them a discount if they pay sooner than later? So a lot of times you will see something like 2%, 10, net 30 on an invoice. So what does it mean? If they pay within 10 days, they get to save 2% off of the invoice amount, or the entire amount is due at 30 days. So are you going to offer them a discount in order to get that money in sooner than later? A big one there is, do you need that money sooner than later? This does affect your cash flow. If you're doing a job, especially if you're providing the materials on it, and let's say you do require 50% down for materials up front, but then you give them 30 days to pay that 50%, can you handle that with labor costs, overhead, and such? Or do you need to the receive the income as soon as possible in order to make those bills? One of the reasons people do give that discount on a shortened term is to make sure they get the money in sooner, because those clients are going to want to save that percentage. If they go to the net 30 days, or maybe you give them 45 days, in some cases, I have seen companies give 60 days. If they don't pay in that time that you've given them to pay the net, do you have something in your contract that you had them sign, or on the invoice that they received stating that it will go to collections? Have you put something in that to cover your costs for collections? Because unfortunately, companies do not work for free. They do take a substantial amount of that money, 30, 40%. And if you do not have the terms written out properly, you can't add that fee to the invoice. So those are some big things to think about, how you want to move forward with your business. Personally, getting cash up front can be the simplest way, whereas if they don't pay, you don't do the job. And then you don't have to worry about the overhead, but or not the overhead, but the collections, but then you have a good chance of turning away some clients that can't afford to pay you that day. So it is a large business decision to decide how to set up your accounts receivable, how you want to manage non-paying clients. So if that is something that you want to look at and you want to brainstorm, go ahead, click on the link in the comments area, and let's set up a time to talk. Let's just brainstorm the different options you have and how that can affect your business, or how it can help your business grow. There is also other ideas that you can put into place, where you work with a company that offers your client uh, credit so that you are not in collection business. You get paid up front, but your client still gets the chance to pay it in payments over a time period, or however they set it up with that company. So that is also another great option especially if you're doing some large projects for them that ends up having a bit of a hefty price tag. So let me know if you have any questions. If you want to set up a call just to brainstorm, walk through that process, see how it would look on your books, and have a great week. I will talk to you next Tuesday.